Eric Mwathe here. In this educational video, I want to take another look at the RSI and how sometimes the RSI can give you very interesting information in terms of how to time a stock's rebound after it has had a pullback. So we're going to be taking a look at the RSI. In this example that I'm going to give you, it's going to be on a weekly chart, but you can actually use this on a daily chart or a monthly chart or an hourly chart if you make the following observation. So what we're doing here is, you'll notice that on the example we have a stock and this is the RSI. And so what happens is that if you take the highs here and this high, draw a straight line, the stock eventually broke out here at that point. So this became your buy point. So you buy the stock when the price breaks out and the RSI moves above this declining line here. So you make a new high in the RSI in terms of a trend breakout. Also notice that there seems to be a wedge here. So really what's going on, another way to look at this is to look at it from the point of view that sentiment, which is the measure of the RSI, was forming a wedge, and then there was a breakout. So the thing to do is, and the reason for this video is, what you do is, once you've established this line here that connects this high, these three highs, draw a straight line. So keep this line on your charts, because down the road it's going to give you very interesting information. In this particular example, we are going to see that every time the stock would go below this line and recapture the line, then this is uniform action below and back above the line. This became a buy point. You buy the stock during this pullback. Again, the stock would come and tag this line below the line, back above this line here. That again became an ideal entry point for a very good gain. And again, you see the stock do the same thing, where it would come below the line and above it. The key here is uniformity. Okay, the fact that it's going above, below, and back above it, below, back above it, below, back above it, and in each instance it seems to be uniform, that is when you know that this is a true reversal signal. Also in the video example, you're going to see that I draw a line and even this lower line, support line here, in the example I'm going to show you, would give you nice entry points, especially once the line moved below that line and back above it. So let's go to the example. So we're taking a look at TNA, which is the 3 times bull small cap ETF. And notice, so what we do here is we take the highs here in the RSI on the weekly chart, highs there, very close to these highs here, connecting that high there, draw a straight line. So once we broke out here, which also happens to be, seems like this market had formed a wedge, was wedging here over many months. Once we broke out here, beginning of 2013, that was a breakout above this declining top line here. So once you break out, that something is changing in the stock, and that also coincided with a breakout in the price there. So that was a very nice entry point at about $31. Okay, but now for the purpose of this video, what we're talking about is how to time these subsequent pullbacks here for a nice gain. And you can see that if you extend this line that we have drawn, this line here, and you see that, now let me remove that so we can have a clean line, is every time we tag that line here, below it, back above it, looks like a V. That was a perfect entry point there for a very nice gain. Another, we come and tag that line again there, which is this precise entry point here. We come and tag this line here, which is precisely this very nice entry point, and each of them gave you perfect entry and a subsequent bounce in the stock. So by extending this line here, you are using the stock itself to tell you that this line is important, because this was a nice entry point, support here, support here, support here. So in the future, let's say the stock comes and the RSI tags this line and jumps, then that's going to be an ideal entry point. So this line has to continue extending. On the other hand, if you notice that for the first time in many months, that the same line is not offering you support, and let's say we break down below this future line here, a breakdown below that line is going to be a sell signal. Now, another aspect of this is now I've included this blue line which connects the lows on the RSI, the lows there, very close to that low, double bottom low here, and through this area here. What you notice is this line here, this blue line at this particular point connected 3 points, this point, this point, this point, actually 4 points. So this line was legit. See, the market came below this line and back above it. The fact that it was uniform below the line and back above it tells you that that was a legit reversal signal there, and that happens to be this low here, and the stock has had a very nice run since then. So the same line was tagged here, which also happens to be a very nice support point at this particular point here in September. So this entry point there. So the same line was also on the lows is offering the stock support. So we see support coming from two lines. The top lines on the RSI here, which is the brown line, and the blue line, which is also seemed to have offered very nice support here, which for a nice gain there. So using the stock itself to tell you how to trade sometimes is the best way to go, and it gives you very interesting information on how to time stocks. Eric Moade, good luck, peace, and blessings. Woo!